This is your market update for March 23rd, 2012. I'm Mark Starosciak, Managing Partner at Infinium Investment Advisors. Thanks for tuning in this week. Have a pretty interesting topic to cover, and that is we want to try to frame for you various moves in the markets, that being 10% moves, 20%, or 30% moves, either up or down. And in my opinion, at least, it's very important that we understand contextually and historically how these moves tend to work in terms of the length of time and the severity. And before we get started here, of course, anything we talk about is purely for informational purposes only. It is not a recommendation to buy or sell any securities or follow any investment strategy. We don't provide tax or legal advice, and always consult your own financial advisor before making any investment decisions. So jumping right in, let's take a look first at this slide that shows a 10% move in the market. And it's pretty interesting here. What you see is on average, a 10% move, and that's either up or down, will occur at least once a year. And I think the important point here to note is what is the severity or length of time of those moves. And what you can see here is that the average loss when the market moves down at least 10% is actually an average loss of about 20%. And that will last on average 100 days or so. When we look at the a move of greater than 10% to the upside, that move tends to be 34% on average and last 223 days. Very important information here. Why? Because what it tells us is the moves to the downside don't tend to be quite as severe when we see at least a 10% move. And likewise, to the upside, they tend to be a lot greater and tend to last longer. And what you'll see through both 20 and 30% moves, it's nearly identical in terms of the dynamics between the ups and the downs. So when do we see a 20% move in the market? Only happens on average once every 3.5 years. When we go down, it's by at least 20%, it's on average 36. And that lasts about 300 days. Average gain, 100%, lasting 885 days. So what is that, 2.5 years or so? Very important, right? Because what we've seen are moves of this magnitude, especially last year, that have really rocked a lot of investors. And what you can take away from these slides and this information is knowing that the downside, although it always seems scarier, it's always very difficult to deal with, the upside is usually a lot better. Now, of course, the old caveat of past performance is no guarantee of future success or future returns, always needs to be considered. But nonetheless, we have quite a bit of history here. This goes back to 1928, all of these slides. So let's take a look then at a 30% move in the market, and it's the same dynamic. The loss isn't anywhere near as great as the gain. And typically you see a lot longer period of time on that run higher than you do the run to the downside. So let's take this a step further then, and our considerations for you today. Number one is how much variation can you expect from your portfolio? Many investment advisors and their clients don't know this. We run analysis like this all the time for especially prospective clients, and they're very oftentimes quite surprised at what their portfolio is expected to do. And you might find that in your particular case, that your portfolio has a greater range of variation when we see these big moves than you're comfortable with. And if that's the case, you obviously need to do some portfolio repositioning. So if the market makes a big move up or down, how will your portfolio react, and is that appropriate for your goals? Again, we always tie this back to the financial planning piece, which is what do you need your money to do for you? And when we see that next big move in the market, is your portfolio set up appropriately for it? And again, are you comfortable with it? So knowing that information we think is very crucial to your success, and of course, avoiding mistakes and making the wrong move at the wrong time. Again, I'm Mark Starosciak with Infinium Investment Advisors, and we will see you next week.